go right now with Maria Bartiromo.
Broadcast. I want to welcome everyone to Global Markets Radio Daily Recap. I'm your host, Andrew Spanton. Monday, June the 4th, 2012, 4 p.m. Eastern. What a day. What a day. I'll tell you, just as we're talking, this candle was looking so much better. Man, just slammed him on the close. After ripping him. 5-minute chart, see? This would look a lot different than here. 4 handles. Enough to make the charts look much different. But we'll still take the doji. Thank you, sir. May I have another? The euro once again acting stubbornly well. What's up with that? S&P coming back nicely after last night's drilling in Asia. Hopefully, those of you took my advice. Oh, baby. Friday's lows held. Euro held. Closing close to 125 on more rumors. I'm telling you, wait. You watch. The word's going to get out. GQE. I'm telling you, the one thing that's going to save this market, you buy with your eyes closed, you hear that. Pay whatever price. Global quantitative easing. It's the only thing that will that will get the patient back out of ICU. Back from. Get him out. Because let me tell you, this patient is back in ICU. And once again, it just feels like we're on the precipice. It feels like Geithner's pulling his freaking nose strings, lying his ass off to get whatever deal has to be done to prop up a system that we all know. Say bye-bye. Especially the euro. U.S. factory orders down 0.6%. Revision down 2.1%. Disgusting. Things are falling off a cliff. We're even seeing signs of deflation. And you have oil coming in more. But you look at this euro dollar, and it certainly looks like we, again, could have bottomed for now. All eyes are going to be on Draghi. German factory orders tonight could be interesting. Look at it down 1% from previous month, up 2.2%. As Germany goes, so does the Eurozone. So we have also the Australian Central Bank and Bank of Canada. Oh, baby, big night ahead. But it just feels like something's coming. Some GQE. Doesn't it sound good? And I'm not saying where the U.S., let's say, backs other countries' debt in any way. But everyone sort of, everyone takes a shot around the campfire together. It's really more like everyone's injecting themselves with heroin, but, kumbaya. Markets will love it. Up 500 points. Bang. On top of that, you have some sort of mechanism in place where the market has confidence that the Eurozone is going to be able to meet their obligations via help from Germany, whatever. And even, you get Germany to agree. China does it. All the G7 in one big kumbaya, and the market's up huge. Because they know. It's like, let's say if your credit card debt is $80,000 and you got another $20,000 left on your credit line, and they're going to cut you off at some point, and you're never going to be able to repay it. What are you going to do? What are you going to do? I'm not even going to say it. You know what you're going to do. And that's what these governments are doing, in my opinion. They know it's all over. There's going to be devaluation across the board. So why not just milk it for all we can? Now, I have to tell you, on CNBC today, they certainly had a great argument, a great conversation talking about how we should, Larry Summers, his article in the Times, how we should refinance all the debt that we have. And I got to tell you, I couldn't disagree at all with a lot of things said. If we could borrow for 30 years, 100 years, we should. 100%. Refinance everything. But to spend that money without a plan is ridiculous. To refinance and then not cut the deficit and use that savings to do things is ridiculous. Right now, the U.S. government is basically in debt based upon government spending right now, $1.2 trillion a year, and that's with this economy supposedly at 2% GDP. What if GDP slows? More people out of work, less government revenue, more debt unless you cut spending. So all this refinance talk and all this stuff is just great. But if you keep borrowing and borrowing more than you're bringing in, at some point it's got to be over. At some point, you're either going to devalue your currency or or you're not going to be able to pay your debt back and you default. Or you invent the new wheel and you make so much freaking money that you can pay it back. Okay. I don't know if that's really possible, but given the debt of the United States, certainly a rant. And again, so dollar index, as we said, looks like it's going to come in more. I think Australia tonight, I look for the RBA to be possibly on the dovish side. But they are certainly not cutting rates. No freaking way. They're waiting for GQE. They already did their part last time. The RBA, Royal Bank of Australia, cut rates 50 basis points at last meeting. And guess what? These $1 million economists, thought they were going to cut rates by 25. They surprised the market. So what does that mean? Now people think, they might cut again. Come on. They cut by 50 to buy themselves time. Give it more effect. Panic mode would be to cut by 50. Cutting 25 means you don't know what you're doing. It's like, you wait and see. We're not in a panic mode in Australia. Their economy is not showing signs of collapse. Slowing down, yes. And again, remember, China, industrial production coming out on Saturday. Big number. Big. Was it a 1 month wonder? The collapse from 13% to 9.5, 9.8? We're going to see. But look at this Australian dollar. It looks good. A nice little buy on pull back. It even took out previous day high. Hold the line. Obviously, we take out 96, say good night. But it's way oversold. I certainly think the Australian dollar, just on the no cut, could easily get a nice rally. If the stock market comes back and gold continues to go higher, this baby could easily pop 98.50. Easy. I think the key is going to be the statement. The statement could be dovish. And therefore, I think you would have a nice reversal. Maybe they'll say they might cut again. Maybe they might say the global market is deteriorating, worried about China. Something I find funny that B.H. Bilton, if you remember, months ago, said things were slowing dramatically. Even Caterpillar. There were signs. It's amazing. The market's like a huge ship. I guess, and people just didn't believe it. The holes. Until it's too late. And you look at this Australian dollar hourly chart. Easily pop up to 98. But I think that the statement's going to be key. Oops, New Zealand, sorry. And I'm not really sure. I could see them going either way. That things seem to have stabilized maybe, or confident that things will stabilize. Want to do a wait and see attitude. Don't forget, we have ECB on Wednesday, MPC on Thursday. So this is a time when you really could get, they're all meeting, right? Australia, Canada, ECB, MPC, all meeting. And there was a day off today. If these guys can't pull off some sort of GQE, market's going to collapse. And we are on the precipice. So, maybe we see what they got. We get the rally, and then we roll back over when it's not enough. That's the big question. I'm not saying the rally's going to hold. It'll be a one-day wonder. But we're certainly due for a big pop. I mean, look, we're down big. We're bottoming. Nice double bottom in that New Zealand dollar. It looks good. Keep a tight stop at the lows. Listen, I'm bearish, but I think this market's way overdue for a rally. The euro won't go down anymore. Dollar Swiss coming in nicely. Beautiful outside candle. Oh, baby. I think dollar Swiss has more to go. This could be a top of months, maybe. Again, I think euro Swiss is going to break. I think we're going to have one of these again. Do you really think the Swiss are going to make you pay to deposit money in their bank? That's insane. So not only are you going to get no interest rate on your money, you're going to have to actually pay. That's nuts. That's a recipe for disaster is what it is. Dollar Swiss looks like it's going to come in nicely. Dollar Canada, very stubborn today. Still like it short. Still think we topped out. Time for a nice pullback. Big rate decision tomorrow. Remember, Carney was talking rate hikes. If you were a listener of my program, I said that was lunacy. So once again, you might have his statement. Bank of Canada doing nothing. They're not raising rates. But the statement, and if it is on the hawkish side, meaning we believe the global recovery will take shape, our economy is sound, blah, blah, blah. Or do they go into a possible cutting mode, which I think is ridiculous. Bank of Canada, if anything, is going to basically say, all right, we're going to wait and see for now, but we're doing just fine, thank you. So I think this dollar Canada has potential really to have a nice pullback. On the news, big day. Big central bank day, that's for sure. Sterling, relative strength loser as euro sterling continues to rally. Even on the Queen Day. Excuse me, whether that's called. But certainly cable looks like a bottom. But with euro sterling popping, euro acts very well given the circumstances. How about the euro yen? Thank you, sir. May I have another? Oh, baby. Remember, people, 1 week free trial. Email me, info@globalfxllc.com. Oh, baby. Things are going to be heating up. Summertime. Summer specials. Look for an email. But look at this euro sterling. Looks like it could bounce a little bit more. 81.50. Maybe even 82. Follow me on Facebook, Voice of Forex. Follow me on YouTube, Voice of Forex. Certainly all the pounds. Pound Swiss coming in nicely. Look at that rolling over. Oh, baby. Got to love it. I think we got a long way to go. Certainly 147. Not that long. Dollar yen. Again, looking pretty good. Inside day. Bond yield stabilized. Intervention. Absolutely. Oh, they're in there. I don't think they let it drop. I think Friday's lows are it. BOP, buy on pullback. All the yens look good. Aussie yen, Euro yen, all of them. Look at the hammer, the bullish engulfing. 99, easy. Aussie yen. Luna yen. All of them. I love them. Buy on pullback. Obviously, stopping yourselves out. Should we take out these lows? I mean, forget it. Even today's lows on these. We break that. That would be terrible. And, you know, you lose 50 to make 100. Risk reward, pretty good. And there's always a chance they do something tonight. Ahead of all the central banks, right? We start with Australia. Who knows what happened before? Why not? Even Swiss yen looks good. Hammer, doji, bullish engulfing, continuation. All look delicious. So again, as far as the wrenches in the engine that could just kill this whole thing, I don't know. What? Australia raises rates? So I think that, we have lots of things on the horizon, obviously. We have the Greece vote. Very big, the Bernanke on Thursday. But given all that, being on the precipice, something must be done, and they know it. And what better week to do it when you have a central bank meetings across the globe? So I think very big news-driven market, and the euro's telling us something. Absolutely telling us something. I'll tell you what, selling the news event for sure, like Euro Canada. Let it rally, baby. Tomorrow, let it pop more. Bank of Canada, look for a reversal. Turnaround Tuesday, baby. I think the euro on any news could have a monster reversal on the downside. Because I don't think it'll be enough. Merkel comments, all of a sudden she's going to go about face. She'll go kicking and screaming, but it just won't be enough. Oh, there you go. But this one looks good, New Zealand. All right, everyone. Hopefully you had a good night. U.S. dollar looking like she's coming in more. Oh, baby. Big day ahead. Perfect day to go premium. Andrew Spanton, info at globalfxllc.com, the only voice you'll ever need. Coming in more. 82, here we come. Julie loves to make you money. Have a good night.